Good morning. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Here we are in the last week of August, and it's pretty hot in Chicago, pretty hot outside. And the only thing hotter than that right now are the U.S. equity markets. So let's see what I'm talking about. Well, we have the NASDAQ Composite Index basically at a 14-year high, break above the $4,500 level. We have the NASDAQ 100 at also at 14-year highs, leading the indexes higher. We have the S&P 500 flirting with the 2,000 level. That's again an all-time high. It's an all-time high this morning. And we have the Dow Jones Industrials just below that. So we have broad-based participation. Now the good thing here too is that the market breadth is very solid. You think after a market that's run so much that we'd start seeing some type of, top forming, or breadth wouldn't be confirming the new highs, it would be running out of steam, but in fact it's actually picking up. So, and we know that if we look at the advanced decline lines, pretty much hitting new highs on the NYSE, same with the NASDAQ advanced decline line hitting new highs. Then we look at the S&P sectors. We have the technology sector, XLK, moving to new highs. We have the financial sector, the XLF. We have the consumer discretionary, XLY. We have the healthcare sector, XLV, also moving new highs, confirming this bull market that's going on. Now, the only thing that's we do see some laggards. That's in the small cap Russell 2000 index. That's lagging a little bit. And European indexes are also lagging a little bit, although they have straightened up over the last 2 weeks. And that's, I'm talking about the German stock market and the French stock market. They're lagging a little bit. That's about the only negative thing you can find in this market. In fact, it's really spreading out across all sectors. Now, we saw steel stocks who have just been multi-year laggards. We have several stocks in that sector breaking new highs. Stocks like AKS Steel, Steel Dynamics, US Steel. Nucor is looking to break out. It's near a pivot zone. And also we have a lot of old technology stocks at new highs. And that's talking about stocks like Microsoft, Intel, Broadcom, Tencor, Micron Technologies. So it's not just led by the newer companies, but a lot of the old companies are joining this rally as well. So in this situation, what's an investor to do? Well, there's a saying, and I'm going to invoke Jesse Livermore when he said, it wasn't the thinking that made him money, it was the sitting. And what I'm referring to is, since April 15th, we've been talking about a lot of different stocks that have been setting up, breaking out, and they continue to do higher. And when you get in a market this strong, you don't want to try to be overthinking it, fine-tuning it, trading in and out. If you're in good stocks and they're moving higher, now's probably a pretty good time to just sit there until the market tells you that something's wrong. So again, I'm not going to repeat that. It's not the thinking that makes you the money, it's the sitting, and you got to know when to sit. And right now, until the market shows us something different, maybe one of those times you just sit there and let your winners continue to run. Now, of course, if they're not acting well, that's not the same story. And I'm not saying that you should just throw caution to the wind and stop paying attention to the market. As always, price and volume has to be your guide, and you should watch the markets carefully. But for now, let your winners run, cut your losers. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor, and good luck sitting.